Welcome to Bear Tuesday. Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub, with your midday market update for Tuesday, the 6th of March. Gold loses its luster and appeal. We're looking at that market today. We'll also be looking at crude oil. Is it a great buy or a great sell at these levels? 3 stocks on the move. We'll be checking those. SUPERVALU, that's an interesting one. Morgan Stanley and J.C.PENNEY. How did our market triangles work with those 3 stocks? Also, sectors. Every sector we track today is in a negative mode. The one that's down the least is the utility sector, and that's down 0.75%. And then you have other sectors like technology, energy are down over 2%. So let's go to the charts in our portfolio and see just what's going on with these markets today. So here we are. Well, before I do that, let me just remind you, we have a investor summit coming up this month in Salt Lake City, just outside of Salt Lake City in Utah. If you'd like to learn more about this exciting event, give us a call at 1-877-219-1482. That's 1-877-219-1482, extension 10234. It's a free call, and the information is free. We'd love to see you there, and I'll be there with some other experts, and we'll be able to help you understand what's going on and how 2012 could be a pivotal year for investors everywhere. We'll also be looking, if you're calling overseas, you can give us a call at 1-801-341-3981, same extension 10234. So look forward to hearing from you and seeing you at our Investor Summit in Salt Lake City. So let's go to the charts, and let's go to our first market we're going to be looking at in the portfolio is the S&P 500. That's a plus 55. You can see that's a trading range now. Today's move down almost 1.5%. We look at the chart, you can see we had our parabolic, gave a sell signal yesterday, but you have to remember this market's had no corrections whatsoever. It's just gone straight up from our original buy point at 1292. Even with the pullback, it's still in a bull market. I mean, we may see some further weakness, but I still think we'll see. I'm going to put my telestrator on here just to show you what I think. I think this level here potentially, which is around the 1340 area, is going to act as support. You see how it's a previous high, it held that. I think potentially it could still hold this market, and we may sort of back and fill here for a while. But generally speaking, the trend is still positive with our monthly and our weekly trade triangles, and that is what we like to see. So they're still pointing higher, so the trend is your friend. So let me just take this off the screen, and let's go to, I'm going to put something else on there just to take a look at it. I haven't looked at it myself today, so let's do that right now. So, and that's going to be an on-chart study. It's a Donchian trade channel. And there you have it. We're getting very close to the lower end of the Donchian trade channel. Every time that happens in a bull market like we are right now, it tends to lend support. So I think there's a good chance we'll see some good support coming in this market very, very soon, perhaps as early as today or tomorrow. So let's go to our next market. I'm going to skip the Dow and the NASDAQ because we can talk about those, which is pretty much the same picture there. But let's take a look at the silver market, which is now a minus 60, a trading range. Again, we're at the lower end of the trading range. We've found support at the Donchian trade channel. We are still, it's a peculiar thing with silver because we have a monthly trade triangle, which is pretty unusual, from 35.32, indicating the longer term trend is up. And we do have a good movement up here, but this is a very negative day here, this big negative engulfing line, and we've had the pullback actually for several days now. So this is a key area. Is it going to hold here, or are we going to continue down to some Fibonacci retracement levels, which I'll just draw on the screen right now. So we go to the lows, from the highs to the lows on the Fibonacci, and let's just scope this in just a little bit closer so you can see. So based on this pattern, we could see potentially a move down to the 31.75 level, or even to the 30.50 area, the 30.40 area right now. This would be a 61.8% retracement, and this would be a 50% retracement. So it's possible you can go outside of the Donchian trade channel. We could come down, maybe boom like this, and then come back up. So let's just see how that plays out. But generally speaking, the momentum, at least for the moment, is on the downside. We do have a trading range with a 60, indicating that we could see a choppy day tomorrow or later on in the week. So let's clear the screen, go to our next market. And the next market we're looking at is going to be gold. And gold has really had a really amazing move. You can see it's below the Donchian trade channel, but unlike silver, all of our trade triangles are red and negative. And here I'm going to draw the same Fibonacci retracement from the highs. Again, there's a very negative engulfing line right there. So click here, you get the little yellow box here on MarketClub, and just scroll this down to the lows, and you can see how we've got some target zones here of 1650 and of course 1617, which is a 61% retracement. Can we get to those levels? I think we probably can if something doesn't blow up in the Middle East. But generally speaking, the trend is solidly to the downside, and a lot of people have been very disappointed in gold because it hasn't done what they expected it to do. But longer term, what I want to show you this, and let me just take this off the screen for a moment because I was looking at this earlier and I wanted to share this with you. So let me just take those studies off, take this off here, and I'm going to go to maximum out and just put a simple line chart on here, which will get a really good thing, and scope this in just a bit. So I'm going to go from the very lows here, which is the last mini bear market we had in gold. This is back in 2008. Excuse me. And just do a very simple trend line. And you can see how this trend line connects perfectly with what we call the points. And the points in this case are here, here, here. So you've got a total of 6 points. Very unusual to have so many points on such a long trend line. This is, as I say, this is going back to October of 2008. So this is right here. This is 2008. That's October. And you've had this trend line in place pretty much since then. It's never broken that trend line. Now, the key thing is, are we going to come down this time and sort of just turn around like this and create a potential reversal like a head and shoulders like the crude oil and then go higher? I think there's a good possibility we could do that. So this is going to be a very, very key support coming into this market right around here, right around the 1620 area. I think that's going to be a very key level to watch in gold. If it breaks through this level on the downside, then I'm completely wrong, and this market can go significantly lower. I think we could probably take it down to the 1300 level. I don't think that's going to happen, but we're trading, and you have to be prepared not to fight the market, but go with the market. So let's clear the screen off, but have that picture in your mind. All these points it's reached, and it's still acting very well. So let's clear the screen and go to our next market. And the next market we're going to be looking at is going to be, excuse me, copper. Copper's had the move up. A couple of things I'm a little bit concerned about. I thought the copper with the economic development in the country, around the world, was looking pretty good. It looks like it's still good longer term, but short term, intermediate term, you should be out of this market and should not be holding any positions at the moment because it's still, we have weekly and daily triangles negative, meaning short term and intermediate term, this market has a problem. Longer term, it's still looking good. So let's go to our next market and see what else we've got here. Crude oil. I'm going to look at the USO and crude oil. Now, here I think these markets are going to go higher. Now, we're down 1.83% in crude oil, which is a ton. But let's take a look at the USO. And here again, we think this market is going to go higher. We talked about this trend line right here. Now, it's not unusual in a situation like this where you have a market that breaks out. For example, it'll break out like right here, and it'll start going up, and it'll pull back. And it pulls back to the support of the previous lines, like right here. So this, which was resistance, actually turns into support. So that's what we are looking for right now. So support should come in right around here on the USO. We're looking at the USO, which basically tracks very well crude oil. And again, we thought this is a very important level, like head and shoulders base, capable of carrying this market up to the much higher levels. As I say, we go, let's say, from 30 to, let's just say, for example, 40. We'll just round it up, 10. So we could see this market going up to 50 as a target zone. So that's what we'll be looking for in this market, but it should begin to find support right around here and start moving up. It really must be doing that fairly soon, but we still have our monthly and our weekly in positive mode, And that's the important thing there. So let's clear the screen, go to our next market. And the next market we're looking at is going to be, hold on, the euro dollar. Well, the euro dollar is actually, we've been bearish longer term on the euro dollar. Our weekly is still positive, so a mixed signal, but we are minus 75, meaning we have an emerging trend to the downside. And certainly you could, let me scope this in just a little bit further for us. You can also draw, but we don't have enough points in my mind. You can draw a trend line right from here, right from this point through here. You have broken it, but it's really not a great trend line. I like to see 3 points. We don't have 3 points, so I'm going to take that off the screen. But generally speaking, when it makes a turn, it looks as though we've made a turn here. Let's just put our candlestick charts. Obviously, this level here is going to be a very important level. In that area we're talking about right now is the 29.77, 129.77. So I says, let's call that the 130 area. Is going to be very important. Do I think it's going to go through first time? Probably not, unless something happens in Europe that we can't even fathom right at the moment. But speaking of the market, the trend, you can see how this market has had a history of rallying, looking very good, like we had here, and then collapsing. And it's very similar, the pattern is very similar. We've rallied here, and then we come down. The question is, do we take out this level here? I think there's a good chance we will. I'm longer term negative on the euro overall because I just don't see it working with all the different countries and all the debts that are over there. But that's the pattern. We sort of rally, boom, fail, go down, rally, fail, go down. So let's watch that very carefully. And let's watch our green triangle. If this turns red to the downside, then we'll see an acceleration in this move to the downside. So let's clear the screen, go to our next market, and the next market we're looking at is going to be the dollar index. I'm going to miss that because it's pretty much the same thing as the euro. And we're going to be looking at this Reuters Jefferies CRB index. Now this is an interesting index because quite frankly, we thought this market had broken out to the upside. We had a signal on a monthly at 323.11. Our weekly was positive from 309. If you take away this, that's about 13 points. If you just divide that by 2, it takes you around about the 15 level. So we're back down to our average price, which was 13.15. So I would say this market should begin to find support. I wouldn't want to see it go much lower than we are right now because I think that would really disrupt a bigger pattern that we're looking at. But so I'm saying right around here, this area, so 310 to 315, this should be, I think, support for this market. And we'll just have to see if that plays out. But generally speaking, the trend is longer term inflationary in my mind. I think this may be a low period we're coming into, but we'll have to give it a little more time and see a little more evidence of that. So we'll clear the screen and go to our next market. And the next market we're going to be looking at some stocks now. In fact, we're going to be looking at SUPERVALU. What's interesting with SUPERVALU, we have a minus 90, so we know the trend is down, but it's had a big one-day move. The question is this a turnaround? I don't think so. And if I just go to a simple line chart, you can see this looks like it just had a little blip, but it's actually up over 3% on a day when the market's down to 1.5%. So that's pretty interesting to look at in that sense. But generally speaking, all of our trade triangles are negative with minus 90. And we look at this market longer term, let's say 5 years, you can see this is doing nothing but a slow boat to oblivion, really. So I think the stock was trading over close to $45, $50 a share. Now it's trading at $6. That's not a good sign for this market. So generally speaking, you see our monthly trade triangles sort of caught most of the move down here. Not every part, but most of the move. And certainly we've been short this market from areas that are, last was August 1st of last year, and it hasn't changed from 844 and the market's at 629. So you've got a $2 and change profit, which is pretty good in terms of on an $8 stock. So let's go to our next market. Next market is Morgan Stanley. Now this is interesting because Morgan Stanley has a buy signal on the 1st of February at 1888. It's 1734 right now. So let's just close in on this and get a little bit closer. So you can see today's action was not good at all. And if I put the weekly in, guess what? We had a signal yesterday on the 5th of March to get out of this market. Now remember, with stocks, we use our monthly trade triangles, like here, to get in, and we use our weekly to time the market. So we took about a 60-cent loss on this, 68-cent loss on this thing, which I think you'll agree is a very small loss. But we are out of the market, and we avoided this big down move today, where the market's down over 5%. You would have saved yourself that amount of money using the trade triangles. And I often get asked, how do I come up with these stocks to show? I just look at the biggest movers for the day, and I just want to show you where we are with our trade triangle technology, because this will help you. All of these were discovered and found out with our trade triangles and our smart scan technology and our trade triangle scans. So nothing new, nothing special. We just do this all the time. So let's go to our next market. This will be the last market we're looking at. And this is, in fact, the J.C.PENNEY. And if you remember, Ron Johnson took over J.C.PENNEY, made a big splash. We got long in this market on December 21st at $33.90. We just exited this position at $40.88, $7 profit on a $33 stock. Very, very nice. And we're on the sidelines. You can see basically the market's lower than where we got out. Not a lot lower, but certainly lower than where we got out. And I think that's the important thing. So we'll just wait until this market becomes a little more mature and a little bit more receptive, and we'll wait for MACD to bottom out and go higher. So lots going on, lots of markets. It's a Bear Tuesday. It looks like we're going to be under pressure probably for most of the day. We may see a little rally later on, but for the most part, we'll see some profit taking, but pay close attention because there's going to be some great opportunities in March, and I don't want you to miss them. So stay tuned to our channel. We have our full show tomorrow. Market Club TV starts at 4 o'clock tomorrow. Don't miss the show. But please, if you have a chance, come down to visit us with our Investors Summit in just outside of Salt Lake City. It's toll-free to call us, 1-877-219-1482. Find out more about the conference, extension 10234. And if you're overseas, of course, give us a call at 1-801-341-3981, extension 10234. We'd love to see you there. I'm Adam Hewison. I'll see you tomorrow with Market Club TV. Have a great trading day.